everybody, and welcome to our webinar this morning on tax planning and global residence with a focus on Europe. We just allow a couple of minutes or moments for people to join. In the meantime, I'd just like to remind you that this will be being recorded so it can be shared with people that weren't lucky enough to be able to join us live. And we will be taking questions at the end or even on the way through. So if you want to put a question in the question and answer box, then we will be able to answer that as we go through. So please feel free to ask questions. We will have Q&A at the end, but we'll also, if anything's particularly relevant or topical on the way through, we will cover that at that moment. So without further ado, as people seem to have all been joining now, a quick introduction to Henley & Partners. We'll be talking about wealth migration trends around the world. We'll be talking about residence programs across Europe, and then we'll have a particular focus on two of the most topical ones at the moment. The UK has made some tax changes in the past year, which have led to a lot of people leaving, and one of the favoured destinations for a lot of them is Italy. So we'll have speakers from both Italy and the UK here to talk about that with us. And like I say, we've got questions and answers at the end. My name is Peter Forino. I'm Director of Tax Services at Henley & Partners in the UK and globally. And we are joined by these fine panel of gentlemen here. Oliver Heslop is Managing Partner of Global Expatriate Tax Services in London. Kwame Amorako is an Associate Director of Private Clients at Henley & Partners. And Luigi Belluzzo is Partner in Belluzzo Partners. His name's above the door even. So Belluzzo International Partners are one of the Italian law firms we work with very regularly, and both very kindly agreed to come on and join us. So firstly, a little bit about Henley & Partners. If you're on our webinar, you probably already know a little bit, but we've got 60 offices around the world now. We've been in this sector for 25 years, advising over 25,000 clients around the world about their investment migration options into 40 different countries, or more than 40, residence, citizenship, and other ways to travel around the world and live and work in other countries than the one that you were born in. We also advise governments in how to set up these programs, because foreign direct investment is a key focus for many, many countries, and obtaining the right amount of foreign investment from the right people is very key. And I think a lot of governments trust us with the design setup of their program, because not only do we advise the high net worth individuals and really understand what people are looking for when they're looking for alternative residence and citizenship, we can also then, in concert with that, help the governments design something that will be appealing and attractive and raise the kind of foreign direct investment that they're looking for. We have offices in 60 cities around the world. Some of those are places where the customers are, and some of them are where the programs are, as you can imagine. So you can see a good global scattering of Henley & Partners offices to make sure there's someone near you able to help you with what you need. So let's take a little start by having a trip through the trends in wealth migration at the moment. And this isn't a new thing. For the last 10, 15 years, since we started tracking this, more and more millionaires are changing countries every year. Now, that's partly to do maybe with the fact that there are more millionaires, and also you've got to follow your money or to follow your market sometimes to make sure that you are in the most effective place. But as you see, this relatively constantly growing over that period. It wasn't possible to go beyond the end of the garden gate, but that trend soon continued and resumed as it was before. Well, there was a question, was that a little overhang for 20 and 21's people looking to get out in 23 and 24? But I think it has just continued in that respect ever since. So where are people leaving? Well, the main countries are, well, China and India are just so large that it's hardly surprising that there are a lot of people there going global and investing around the world. The one that I find quite sad as a UK national is the fact the number of people leaving the UK, and the way that's the second highest now. But we'll be discussing with Oliver in a few minutes the reasons for that. It is partly due to some tax changes, and also due to Brexit, I think, has meant that these are net numbers. So these are the people coming in minus the people going out. And I think it is as much the lack of people arriving as much as it is the people leaving that is driving this number. You see other countries where, Russian Federation, Brazil, South Africa, a lot of these countries further down the list, the need to have another passport and avoid visa travel is often a driver between people taking a residence or citizenship abroad. But where are they going to? UAE is very popular at the moment because it is completely tax-free and is quite a good crossroads for travel. US and Canada, Asia Pacific are quite keen with Singapore, Australia, but Europe is very, very popular as always, and Italy, as you see, is top of the charts there, which is why we got Luigi on as well. Switzerland, Greece, and Portugal also have attractive programs, and that's why Kwame's going to be talking about those as well. So, a lot of people leaving, a lot of people joining, and this never stays still. Woke up this morning to see that Trump is looking at revising the EB-5 visa for the US to make it more attractive in his own inimitable style. He's called it a gold card. And it's going to be, again, we don't know any details yet, but again, the US will always be popular, both for inflows and outflows at the moment. So, programs around the world. Let me hand over to, you've heard enough of me now, I'll have a little bit of a break, and Kwame will give us a little explanation of what all these individual programs are, and then we'll dive into a bit more detail across 6 different European residence programs. And so, Kwame, over to you.
Thanks, Peter. Really appreciate this. And thanks everyone for joining. The investment migration sector used to be a niche for the ultra wealthy individuals. And this has gradually matured into a sophisticated wealth planning tool that is recognized by both governments and financial institutions alike. So as we move through 2025, the sector's role is definitely gaining some importance, and it's still facilitating global capital flows and also fostering economic development. And as Helion partners, how we have positioned ourselves, having been the ones who pioneered this in this industry, we have the processing offices and also the delivery offices. And so what you're looking at right now are the various programs happening worldwide. And strategically as Helion partners, for most of these ones, we have delivery officers to help with our engagements with these government organizations running these programs in order to give it a smooth experience for our clients. While the processing office, we are focused on doing the advisory with clients, especially like the office like the UK office. So globally, on the American side, we've got Canada, Costa Rica, Panama, the US, and just like Peter mentioned, there has been threats on ending a program like the EB-5. But if this is something you're looking at going into, our advice is for us to do this as soon as possible, because there is a potential of grandfathering when it comes to whenever programs are likely to close and the likes of it. For Canada, there is also the startup program, which would give you full access, of course, to the whole of Canada. And there are various ways to do this if you're setting up a company or you're joining a group to do this. On the European side, quite a number of popular programs there for various reasons. And usually these conversations start off with, they would like to know what the tax implication would be, especially for those who are looking at changing their tax residence through these programs. And when it comes to the planning, whenever it's a long-term plan, we always advise gain the residence status so that when it's time for you to move your tax residence, it's really a matter of execution. On the Caribbean side, these are purely citizenship programs, unlike the European programs, which have a combination of resident programs and also citizenship by investment programs. Caribbean side, these are purely citizenship programs for those looking for a second passport, especially on the global south, where it's important for them to augment the ability to access other jurisdiction or higher economic areas compared to their side or where they are currently domiciled. So this is a route for them to get second passport, which would give them visa-free travel within popularly the Schengen area, EU side, and of course also the UK, except for Dominica, which currently doesn't have access to the UK. On the Middle East side, the UAE has become popular. When you look at the trend Peter just shared with us, we've seen quite a number of, especially UK families, looking at gaining residence in the UAE. Some are not planning to move their tax residence now, but as stated, the strategy usually is gain the residence or gain the golden visas, so that whenever it's time or you feel it's time to act on your change of residence status, it's really a matter of execution. So, Peter, I'm going to go through some of the programs. You go to the next slide. So these are select programs. Of course, just like we have shared, there are quite a number of them. Some do the citizenship program, and some just do the resident program, and some combine the citizenship and residence program. So it's really a matter of choosing. Cyprus, as this program requires, it's minimum 300,000, and this could vary with either you're doing business or you're purchasing a property. Either way, the minimum requirement is 300,000. It gives you full access to Cyprus, especially for those who are looking to move their tax resident to Cyprus or looking to move to Cyprus to live there permanently. Now, the government processing time for a program like Cyprus is 2 to 3 months. It's usually faster, so we're usually always working within the 2 month period. The nature of the investment is 300,000 for real estate. There could be other options like commercial or if it's residential. The permit is valid for 10 years, and there is really no physical presence requirement. However, a visit every 2 years is required as a way to maintain your residence until you decide to apply for citizenship. So there is a pathway to citizenship, which would be 5 years of holding your residence status. Greece, which is a popular holiday destination, and post-Brexit, quite a number of UK families lost their full right to the EU, and so they could have homes there, they could have business interests there. However, because of post-Brexit, now they are limited to 90 days, the 180-day period for the EU. So what most do is to gain the golden visa for Greece. So there is no restriction on the time spent in Greece. And of course, once you have that, your time spent in Greece would not count your 90-day rule, which is restricting your flow, your movement in the EU area. The requirement is it's either you're doing 250,000, which is required to be a commercial property converted to a residential property. So this is a specialized area for the 250,000. Now, what Henry & Partners we have done is to have a portfolio. We have a real estate department gathering a portfolio of various projects that meet the requirements of the Greece government's definition for the qualifying 250,000 euros. However, if that isn't an interest, there is the 500,000 route where either you're doing an investment or you're purchasing a property. That also is there for you to choose from. So most people who do not want to go through the whole process of purchasing a property will just go for the investment and then get to their golden visa so that when they decide to ever go for a property, they can do that in their own timing. This is a permanent residence program, validity for the first issuance at 5 years, and there is absolutely no physical presence requirements for you to maintain your residence. But the pathway to citizenship would be 7 years of living in Greece, and also there is the Greek culture exam, which would qualify you for the citizenship. Italy is also quite the popular one for the obvious reason on their tax cap. And this recently changed. That was last August, if I'm correct, Peter. Changed from 100,000 to 200,000 euros. Still popular for people who are looking at getting into that tax regime. However, the residence program is quite also very attractive and has nothing to do with your tax until you decide to apply for the tax regime. So the processing time for the government is 3 to 4 months. It usually is really also very fast. For our experience, we've had approval in less than 3 months. And again, this would give you visa-free movement in the Schengen area. Your time spent in Italy once you hold the residence would not count towards the restriction of the 90-day rule. And there are options in terms of their qualifying investments. It's either you're buying shares on the stock markets, or you're donating to the Italian government, or you're purchasing the government's bond. And so that varies between that 250,000, which is for purchasing shares in a company or in a startup, up to 2 million euros. where you're either donating or doing a government bond. The first residence card is issued for 2 years and then subsequently every 3 years, which is also renewable. There is no physical presence requirements for you to be there. For you to hold your residence card, you do not need to live in Italy. So we've got quite a number of UK families or families, Americans recently, who are holding their Italian residence card for them as an option, as optionality when it comes to residence. And periods like the COVID pandemic gave us a sense of what's holding this level of optionality means to people. There is a pathway to citizenship also for your Italian residence program, and this is a 10-year period where you have to prove that you have been resident in Italy. So residence requirement is only the case when you're looking at gaining citizenship. However, if you're looking at maintaining your residence status through the golden visa, there is absolutely no need for you to be physically present in Italy. Malta, this one is a residence program. It also has a citizenship program. We'll talk a little bit about that. For the Maltese residence program, this is also a permanent residence program. Government, after submitting your application, would take between 4 to 6 months to process it and advise their approval. The investment requirements, it's either you're doing a donation and you're doing a donation and then including the donation is a real estate option. And there's also the administrative fee. So it's either you're doing real estate, which is a rental, you're leasing, or you're purchasing a property. These are the options. And then there are donation routes also to augment that investment you would have made. This is valid for 5 years, and there's also no fiscal presence required for you to maintain your residence. Now, these programs do this because, of course, these are done by the high net worth individuals or entrepreneurs looking for access for their businesses or expanding, or people looking at expanding wealth into these jurisdictions. So they try as much as possible to make it very flexible for those who want to hold a residence and also to be very mobile in their workspace or their lives. There is no route for citizenship if you're going through the residence program. However, there is a citizenship program which would give you your EU citizenship. Maltese citizenship would essentially open you up to the EU. And this takes between 18 to 20 months for you to be able to get your citizenship access or your passport. Now, with the citizenship route, there is a donation option. You have the option of doing 750,000 if you're doing as a single applicant. When you're doing a 12-month period for citizenship, and if you're looking at a 36 month of citizenship, there is a lower donation amount for you to do. So that is a Maltese citizenship. So it's a 12 months residence, but the entire program is a citizenship program, which is an option. And I am happy to do a one-on-one to, of course, advise you on what this would take and what this requires so far as submitting your application is concerned. Portugal has become the most attractive one because of its low hurdle in getting citizenship. So the residence program for Portugal is, of course, it takes 24 months for you to get your residence, 18 to 24 months for you to get your residence card. But your route to citizenship starts at the point when we submit your application for the Portugal residence program. Minimum investment is 250,000. That is when you're doing a donation to the cultural heritage or a program for Portugal. Or you have the option of also doing an investment fund, minimum 500,000. The first card is issued, recently changed to 2 years post-COVID, and then subsequently renewed every 2 years. So, of course, there is no requirement for you to live in Portugal. However, if you're planning to apply for citizenship, it is required for you to do minimum 14 days every 2 years or 7 days every year, or 35 days in a 5-year period for you to qualify on the fiscal presence side. And then when it comes to the language side, you do have the option of either writing a test or you're doing the Portuguese program, language program, 150 hours of it spread within the 5-year period to qualify for citizenship application. So the pathway to citizenship is 5 years starting from when you submit your residence program. Spain, we're currently at a risk of closure because, of course, they are changing the whole idea of the golden visa on the Spanish side. So closure is pegged for the 3rd of April. So our advice is if you're looking at doing this program, you have to work with the speed of light to submit your application. Minimum is 500,000 if you're doing you're purchasing a property, or if you're looking at doing a fixed deposit or deposit in the bank, it's a million euros. And of course, if you're doing a bond, that would be 2 million euros. So there are quite a number of options to take, but it will also depend on the speed of our clients and the route with the fastest way to be able to submit an application, just as so we can grandfather your status for program. So the first card is issued for 3 years and subsequently 5 years, and the pathway to citizenship 10 years. We're happy to hold a one-on-one to advise on how any of these programs we can get access to getting your residence card or your citizenship. Peter?
Kwame, thank you very much, Brad. That was really comprehensive. And I say it's, I think the thing about putting it all together on one slide is it shows what your options are, how quickly, the question is how quickly do you need to be able to move, how much money have you got available, what kind of investment do you prefer? Some people prefer financial investments, some people prefer real estate investments. And so just having them all there side by side was quite an effective way of showing it. And building on from that, we've summarized the tax thing. I won't go into all the details there because I think in the interest of time, but I tend to think of these come in pairs in many respects because Greece and Italy both have the flat tax, but Greece is 100,000 and Italy is 200. Cyprus and Malta are both islands with an offshore regime where it's quite handy. They both have a domicile-based approach. So if you have gains outside the country, they can be quite effective to not tax those. And Portugal and Spain, famous for the quality of life, but aren't ever accused of being tax havens now that Portugal has stopped its non-habitual resident regime, I will say that again, at the end of 2023. So they both have reasonably high tax rates, 47, 48%, and but investment income is only taxable at 28% maximum in Spain or flat rate in Portugal. So they are still attractive if depending on what your income levels are. I won't talk more about Italy because that will spoil the fun for Luigi later. So let's look at the UK, and it's a scene famous from every movie you've ever seen to just prove that you're in London. I'll say, Oliver, there have been some tax changes last year. Do you want to just give us a very, very quick high spot run through what they were and how what's going to happen?
Yes. As of this April, the non-dom regime is disappearing altogether. So that means that people who arrive new to the UK are now into the FIG regime, foreign income and gains. And this is a residence-based test now. The domicile has disappeared. It's all about residence and how many years you've been here. So what that means is for the first 4 years of you living here, you'd get the benefits of FIG, but after that, the benefits disappear. And that is a major change because under the old rules, you could go up to 15 years of benefits. So that's quite a cutback, really. So onto this slide now. I'm not going to go into every detail here, but suffice to say, the rules used to be no UK tax if you leave the gains and the income outside of the UK. That was how it worked. And non-domiciled settlers of trusts would be able to avoid UK tax. That's gone now. I won't talk too much about trusts, but if you're a resident settler, you can now be caught by income and capital gains tax. Under the new rules, you're into this new 4-year rule plan. And so once you surpass 4 years, you are taxed on worldwide gains. There's a rebasing of capital gains from 2017, I believe. They changed the law on that. It's now 2017. And then that is all I have to say on that, really. The reporting requirements are still in place, but they are easier than before.
I think, Oliver, one of the things we were talking about this before, what's interesting is that the first 4 years are actually better than they used to be, but that's been lost in the noise of the fact that it falls off a cliff a bit sooner than it did before.
Yes, I think that's right. 'Cause it's not about remitting anymore. Sorry, I mean bringing in funds. You automatically get the relief, whether you bring in the funds or not. In fact, you can bring the money in, so that's an encouragement to invest in the UK. So that's what that was
Yeah,
about.
yeah. And if you say
Yes,
there are sort of people, obviously, not everyone's going to have a clean cut. Some people will be in their first 4 years before the rules apply, and then so I think this is sort of you're summarising here what individual taxpayers what's going to happen to them each year. So I
that's
think
right. Sorry,
yeah,
I've got a guy that arrived 3 years ago, so he's got 1 year of the new FIG regime, and we're just deciding how best to use that income. And because he made non-dom claims before, he can also access some of those funds as well. There's a regime called TRF, which allows you to bring in funds which you claimed as exempt under the old regime. That's a little bit complicated, but we're around to discuss these things if you wish.
yeah. And I think yeah. So you mentioned also trusts a little bit as well. But you say that yeah, before that it was quite common for people to use trusts, but now it's going to be much more difficult if you become tax resident, isn't it?
That's right. Both the residence position as a settler and also the beneficiary can drive UK tax now. It's much harder to use trusts. The excluded property trust has gone as well. So you're going to start to look very much like a UK DOM investor for tax relief purposes, i.e. you won't get the tax relief.
I think also one thing that we haven't touched on the slides, but I think you've seen in practice a lot, and I would add that Oliver's firm probably advises more Henley and Partners clients on the UK tax aspects than any of the others we work with. But I think this started a sort of exodus of high net wealth people that have been in the UK for a long time that were non-domiciled. But I think also just general tax changes mean that UK nationals are looking at leaving as well, aren't they? Increasingly.
Yes, I think that's right. Yeah, I think in the case of expats and UK nationals, there was an idea that you could come here for 7 years, and that would be enough to you'd be able to escape UK tax and maybe fund education for your children or something. But the 4 year rule is now seen as more restrictive, even though there are benefits that Peter talked about. It is seen as more restrictive and more unpleasant, isn't it?
Yeah, I think also, yeah, if someone's coming as a standard expatriate assignment, if they still existed in the old way for 2 or 3 years, the 4 years fits nicely around that. But of course, it doesn't always fit in with real life. If you get people tend to time their assignments around kids and school and those kind of things. And of course, if you go slightly over the 4 years, that's when it gets messy.
Yes.
Yeah. Yeah, but I'll say we're talking about people leaving. I think we could do a whole webinar on this. In fact, we have done these in the past, but don't, in the interest of time, don't want to sort of dwell on that because if everyone's going, they don't care what they've left behind, and it's more interesting where they're going to. So, Oliver, appreciate your input there. Thank you very much, and let's move
Thank
a
you.
look. Let's look at where they're going to, and this wonderful photo tells you can only be in Roma. And so I'll hand you over to Luigi to take us through a little bit about Italy and the programs, and then also the tax consequences of that. Luigi.
Thank you, Peter. Thank you, Henley, for inviting me. It's always a pleasure to contribute. Well, Italy, not only because I'm Italian, notwithstanding I live in London for many years, really has a program which we call No New Tax Resident, flat tax. So the Italian NTR. I always stress that it's not a non-dom because it's based on the concept of residence and works very well. It is basically a wealth planning tool you should understand within an international family or in a relocation move whereby you have to plan internationally. Why? Because it is the full concept is it is like having two slices. One is the domestic Italy, where there is a full taxation like all Italian tax residents, and the non-domestic Italy or the international side of the apple, where you pay now 200,000 euro. Not everybody, we will go in a moment on that. But now, if you want to apply for 2025, it's going to be 200,000 per year. Before commenting how it works very briefly, because it's quite well known, I just wanted to add two things. First, we also, because yesterday Mr. Trump announced something interesting about the US. The Italian program has been approved by the European Union at Moscovici from Mr. Moscovici. And it is based on the fact that you do not use the program to cheat the system. So it's going to be a compliant tax tool within an international family or somebody who wants to relocate to Italy. Last but not least, we have quite a good experience. Our first case was in June 2017, immediately after the new rule. And as everybody knows, this rule was alive and kicking, notwithstanding the change of government. The only thing changed was last summer, August the 9th, during a starry night in beautiful Italy. Somebody at government level introduced this rule, which was basically to put a little bit more expensive this program because the numbers and the interest is quite relevant. My experience is that 200,000 or 100,000 are not making the difference. And to go to Kwame question before, if you can prove that you arrive in Italy before August the 9th, Italy is very fair on that. There is a grandfathering rule, so you will continue to pay 100,000. Okay, so how it works? The system in Italy works basically. You pay for a maximum of 15 years the flat tax, 200,000 or 100,000. This is covering all income tax, all gift tax, all inheritance tax. There is not any program about remittance, so that we do not have any remittance issue. The main difference from the UK non-dom system is that you can exit only once. Why? Because condition requirement to enter the system is that in the last 9 out of 10 years, you are not considered tax resident in Italy. And this is quite strict and formal. As you clearly know, in the cases we worked also with Henley, the immigration is heavily scrutinized. Taxation, we do recommend to make an administrative ruling before the tax authorities, aiming to receive an answer, which is, yes, you can enter the regime. This means that you've been considered non-tax resident in Italy for the last 9 out of 10 years. Of course, it applies to Italian citizens as well, so there is not any limit on citizenship. The regime can be extended to one or more of family members, according to a broad concept of members, even to the cousins. So the main applicant pay 200,000, or if it is in the grandfatherhood, 100,000. Any other, by option, pay 25,000. So the increase has been only on main applicant. The very good system in Italy is that we can liaise with a public officer, duly trained. They understand what we are saying, of course, in Italian language, but increasingly they understand also the best practice for international families and for ultra high net worth individuals. So the Italian government, notwithstanding from the political side, is very open and understand that this also, the population understand that this is also a way to attract investments and to attract private spending. So the new tax resident flat tax regime, in my opinion, is one of the best regime you can have, because it's a well-planning tool. Last but not least, which is also my last word for attention, capital gains on qualifying shares, it's one characteristic of the regime, meaning that according to Italian meaning of qualification of shares, if you owns a qualified participation above 20% of voting right or 25% of the share capital for non-public stocks and 5.2 for public stocks, basically you can do a capital gain, but you will be treated as a tax resident in Italy if you do it in the first 5 years. Often this is a concept which is not easy, but the philosophy is very related to from what I started. So the EU said, okay, I authorize you to do so, but we cannot accept people hopping in, making a large capital gain and moving out. So you need to be stable in the first 5 years. And that's why we got secured with the tax authority cases where, for example, because of a tag-along or drag-along, people was not in power to decide whether to have a capital gain or not. But we basically stayed in with the money blocked for 5 years, blocked, I mean, invested in 5 years, and the tax authority gave us a ruling to work with that. So there are best practice also to plan because there is a good understanding of the tax authority of what's going on.
I think
If
that's
I
a
may,
very important. Can I just ask you a question on that point, Luigi?
Of
Because I
course.
think that's a very important one. Because for UK nationals leaving the UK, capital gains that they make after they leave are exempt in the UK as long as they stay out of the UK for at least 5 years. So
Yes.
the aim would be to leave the UK, go somewhere else, recognise the gain, and then after 5 years, you've got the option of coming back. Now, if Italy, if that 5 year period you effectively blocked from making that gain in Italy, then that does tie one hand behind your back on that one. But I think you
Yeah.
said as part of the ruling process, it's possible to have more discussion about that, isn't it?
Not only more discussion, but also to find a solution. We have already experience on that. The important thing is to demonstrate that you are not moving to Italy on the purpose to make a capital gain and leave. So it's a matter you basically you commit yourself to stay more than 5 years, which is a perfect fit with the UK. And as you know, Peter, it's really a matter of clusters of clients. Some clients are in charge of their capital gain, other not. For example, the two example I have proposing later, and if is one on a private equity guy we follow with Henley, with a carry interest, a large carry interest position, and this is the only slide. Then we can go back to the system. But I just wanted to explain that because of the Italian rules, the carry interest is perfectly fitting in the new tax resident regime. So it means that this guy, of course, helped by you on immigration, helped by us for tax relocation, arrived to Italy, paid 100,000 euro. At that time was before last August. And for him, for his wife, he paid 25,000 per year, is still paying. And the carry interest enter into the non-territorial income of Italy because it's related to, in a way, offshore from Italy. And as I told before, the whole system is designed that for non-Italian territorial income or assets, you pay 200,000 euro now, or he paid 100,000 euro when he did a couple of years ago. And the PE carried interest cluster is a typical situation where, especially from the UK, but not only, also from different jurisdiction and from Luxembourg as well. And I mean, it could be a good option. In this case, the client, of course, still owns his money offshore. He has no problem on bringing it in Italy to buy a villa or to do whatever he likes. This is a very simple structure where the client decides to purchase his place as a first home benefit. In Italy, there is a very generous system for the first real estate you buy. And we structure that the non-Italian assets are outside. Once again, the guy has a very relevant property in London. And if he would not have applied for the Italian new tax resident regime, he would have paid in Italy, he would have paid a stamp duty on a very heavy stamp duty because the UK is not EU, and therefore is going to be on the fair value of the house every year, which while in the new tax resident regime, it's completely exempt because also, once again, also wealth tax for assets are out of Italy are included in the flat tax. So this is something very easy, and of course we can enter into discussion. Before entering into discussion, if you want, we can see the second case, which is not so easy. It's more sophisticated international family and the use of trust. Because as we said before with Oliver, the change of legislation in the UK is impressive for trust as well. In Italy, we know how to work with trust because of the convention, the Hague Convention. And in this case, an international family moved from London to Milan, but with already a sophisticated international trust and estate planning and worldwide asset, a typical large international family in London. HP provided for immigration to Italy, Belluzzo provided for the advisory of tax, together with the client, the English tax people, advisors, and the relevant jurisdiction one, because there were many jurisdictions, including France, Spain, the Caribbean, and so on. Basically, we reshape the whole wealth structuring. Once again, several years ago, we were among the first firm to go and discuss about trust structuring international with the tax authority. So we explain, notwithstanding we should not be obliged to do so by law, but we explain the tax authority the case of this family, and we explain that they are entering Italy to live in Italy quietly. They will bring money in to live as the standard of life is, but we set up, or better, we restate an international trust according to Jersey law with reserve power on the settler. And we explain that to the tax authority. And the tax authority, of course, we have nothing like a stamp, because in Italy it's impossible, but they really understand what we are talking about. And therefore we anchor to the international trust all it is relevant for them worldwide. So at the very end of the story, as you can see, we use the flat tax regime to move to Italy, and we use the international trust structuring to keep all the asset outside. The settler who has retained powers can receive money from the trust, and the money receiving from the international trust are within the 200,000 or 100,000 in the specific case. So once again, as I started, the Italian new tax resident regime, flat tax, it's a well-planning tool. And if clients understand that and they want to stay in Europe, it is the only place where you can have a certificate of tax residence and you'll be treated as an Italian tax resident. We are, of course, we know what the Germans are saying, the French are saying, because we have experience on several jurisdictions. But once again, if you know how to work properly in full compliance with tax, you can decide whether to keep personal or what to keep within the trust structure. It gives you like an alter ego in Latin, another you in English, which is basically the core of this. And this international family planning, Peter and Kwame and Oliver, is one of the most popular best practices we are now practicing, especially in the last 12 months. And we are also studying for London dwellers, not only for English dwellers, even for English tax resident, as you correctly mentioned before, and other jurisdictions, even Asia. This structure is working. It's very sophisticated, of course, but it works very, very well in the context of an international family. And of course, I'm open to any Q&A and questions.
Oh, Luigi, that was fascinating. I mean, the two of us could talk about all day about things like this, and we frequently do. But I think trusts, I think, sometimes scare people because they think they're going to be expensive and complicated. And also the reputation is that European territories don't always understand trusts. And certainly we see that issue with Spain and Portugal sometimes. But it's very clear from your experience that you can make Jersey trusts, etc., work with Italian law, and particularly in combination with the flat tax regime. So I think that's, again, one of the reasons why Italy is right up there at the top of the list in terms of the countries that are appealing to people when they're moving around the world.
Yeah, and also, you know, being Italian, I can say that I think that notwithstanding we change sometime, like we double the fee, the grandfathering rule is there, not because we are kind people, because we are kind people as Italian, but
Yeah.
also because our law oblige the government to be sure about grandfathering. So if they would not have the grandfathering rule, we could have win. Of course, nobody want to sue anybody, so
Yeah.
it's good that the law has been properly written after a while, and it is clearly set that the grandfathering, because the main question, and then I leave to you, the main question everybody is, are you sure that the system is going to stay on? Of course, no, nobody can say that. But what I'm sure is that if you are already in, you will stay in until the time elapses. And Italy is going to be very fair also in this geopolitical context.
I think also one of the points that came up when we spoke about the tax going up in August was that it had been introduced in 2017. And of that 100,000 increase, probably 20,000 of that was just indexation for inflation. So
Yeah.
100,000 euros in 2017 euros is probably 120,000 in 2025 euros anyway. So
If I may,
yeah,
if I may, and I become a little bit Italian fashion, it
yeah.
depends which jumper you want to buy. If you want a good jumper for a good fashion brand in Italy, you pay a little bit more.
Yeah, I think the other bit we thought was interesting was the comparability with Greece, because the 100,000 we didn't see any people. Maybe I'll bring Kwame in on this one. We didn't see many people that were looking at Italy suddenly decide to go to Greece because the 200,000 went up, the 100,000 went up to 200,000. That to me was quite interesting, and I think in some respects you look at people comparing Greece to places like Monaco, sorry, Italy to places like Monaco, because geographically. But Monaco, of course, there's no golden visa requirement necessarily, but you've got to put a lot of money in the bank account there. And you can be tax exempt and pay 25,000 euros a month in rent, or you can pay 200,000 euros in Italy for a flat tax and pay 5,000 in rent, and you'll be in the same position. So it's interesting about knowing who your competitors are in that space.
Yeah, look, the main one I believe is Switzerland.
Yeah.
If you think about Europe, it's not
Mm,
Monaco, it's Switzerland.
yeah.
Exactly for what you are saying. It's expensive,
Mm,
more expensive than Italy, but again, it's very central. It gives you uh, other pros and cons. Like for example, you cannot work in
mm,
Switzerland. But if you take a honest view, Italy and Switzerland probably are the two best
mm,
solution for if you want to stay in Europe. Now, then of course we will see what happen in the future, and certainly the Italian government stated that they don't like to compete on that. So it's gonna be a regime which is working not in comparison with the other. And Italy is very long and it's a beautiful place. You can stay in Venice, you can stay in nearby the French Riviera, you can stay in the mountains, you can stay in Milan, you can stay in
mm,
Rome. So it really matters. My experience is that it depends on the cluster of clients. So if you have children with school needs, or if you are in your 50 or 60 already, you made your money, or if you are, for example, also new money for young people like crypto and all these kind of things are moving to Italy as well, because these 200 flat tax, 200,000 flat tax gives you also the opportunity to plan
mm.
being an Italian tax resident, which is, something. It's G7, G20, and
Yeah.
this is certainly not a tax haven.
Yeah, that's good. Okay, well, as I say, we could talk about this all day, and we probably will afterwards. But thank you for that. I think just on the questions and answers, we've got a question which Kwame probably the other guy to answer that. As a British passport holder, obtaining a Greek golden visa but not moving there and claiming tax residency, are there any issues in applying for Monaco residency shortly after? So if you're a UK passport holder looking to apply for Monaco residency, effectively, does having a Greek golden visa help you in any way, or is that completely independent?
No, actually. So we've got quite a number of UK families who are looking at various residence programs because they are not looking at getting themselves a passport. So they could be interested in Italy, Greece, or Spain. And because if they had an EU passport, it would be easy for them to have full access to all three. However, they do not want to do that residence program, so that citizenship program. So they go straight to a residence program, and there is no limit to the number of residence cards you can hold.
Okay. Okay,
Yeah.
that's good. I've got another question, which I think actually is for me, but it is the case of Portugal. What's the global tax exposure for worldwide income once you move to Portugal? Moving to Portugal does make you tax resident if your main home is there or you're there for more than 183 days in the year. The non-habitual residence regime, which had the tax incentives, was removed at the end of 2023, I think under pressure from other European countries because it was too generous. So therefore, once you're in Portugal, you would be taxable on your worldwide income, but the capital gains tax rate is a flat 28%. So that would be slightly higher than the UK, but slightly lower than a lot of other countries. So something to be careful about. If someone's looking at moving, then I think we always have those conversations a year or so prior to moving, if possible, to look at the whole wealth planning and see what needs to be done to minimize the exposure going forwards or make sure only the right things are being taxed, similar to the examples Luigi's used with his trust structures there. So if someone's if anonymous attendee, you're looking at moving there, then happily send us a note. We'll have a separate conversation. US tends to follow a line with the US over time. Sorry, next question, I should say. The UK tends to follow a line with the US over time. Do you see global taxes coming based on ILR citizenship as you have a green card for US green card and citizens? I would question whether the UK follows the US on tax policy or not. When the US is leading a global tax policy, the UK might be one of the ones to follow that. But I think that's subtly different from just copying what the US does. I do not see anything about changing global taxation to being based on citizenship. I think the practicalities of doing that would be very important, very difficult. I think you would look at the several million UK passport holders that are living outside the UK, what that would mean for them. I don't see taxing on citizenship as being something that's discussed. There is a constant fear, and you do see sort of comments in the press occasionally, what if they do this? But again, that is not doesn't tend to happen. I think also on the US, don't forget, there are, for regular people that are living outside the US, things like foreign earned income exclusion and foreign tax credits mean that in practice, a vast majority of US nationals living outside the US do not end up having to pay US taxes above and beyond the foreign taxes, because in many cases, the foreign taxes are higher than the US taxes already. So never say never. But at the moment, that's not anything that people specializing in expat tax are worrying about that we see. Another question, the Trump Golden Card, obviously that was only announced overnight. Do we see European programs adjusting or changing in response to this? I think it's far too early to say on that respect. It is in some ways, mirroring those programs that Kwame talked about earlier, just being able to get a US residency by making an investment. The one thing I would caution us about, okay, it's only overnight in the press, but I've seen it says it does give you the benefit of a green card. But of course, for many people that have been in the UK and left, the benefit of a green card is the privilege of being able to pay US taxation to Uncle Sam for the rest of your life. So that might not be viewed as quite the privilege to the taxpayer that Mr. Trump views it as being a privilege as. So too early to say. I don't necessarily see programs adjusting or changing, because as I think Luigi said earlier, the countries aren't competing with each other directly. They're looking to try and incentivize their own specific types of investment that they're looking for. And I think, particularly in the current environment, either you're interested in going to the US or you're not, and changing that, particularly if the level is going to be $5 million, it's going to be higher than most of the European programs anyway.
Yeah.
So I don't think it's going to compete or cannibalize. And I think with the EB5 is quite a straightforward thing to get if you get your meet the requirements, don't you? It's not discretionary or arbitrary. It is something that you
That's
just got to.
correct.
Yeah.
Yeah,
Yeah.
it's more of the surest way to get your green card. And if I read correctly, what Trump's gold card seems to be simply a long-term visa. So there's
Yeah.
no guarantee of residence rights compared to the EB5. And for if you're considering this, the EB5 has been running for 35 years, so it's in its 35th year. So changing something like this would, of course, require rigorous legislature conversations around it. So if it's just something you're looking at doing, it's something we can start doing now. And if you can't wait for the 36 months of going into the US, you can go in with your visitor's visa, or as if you have the right as a UK passport holder, so that we apply for adjustment of status as well, which would give you your full right if you had to the green carding.
Great. Thank you for that. Well, in the interest of time, we have run out. It's a very fascinating discussion, great overview of, I think we've covered an awful lot of material in the hour, and I'd like to apologize to Oliver for squeezing him a little bit in there in time-wise, because I know that's, we have to sort of do that sometimes. So if you need to contact us, then these are our details. I will handle queries for tax. If you're leaving the UK and going somewhere else, I can look at both those countries there, work with Oliver in the UK and other people in other countries. Kwame, of course, for queries about the residency programs, and Luigi for discussions about Italy. So thank you very much for joining us all. And we're repeating this afternoon if you've got friends and family that you think might have missed it. And otherwise, thank you very much for joining, and we will see you on the next Henley webinar as and when you're ready. So thank you very much. Thanks all.
Thank you, Peter.
Thank you, everybody.
And thank you to everybody for joining. Bye-bye.